Can I just start with what happened at the Supreme Court today? Did you think it was appropriate for Jay Powell to be in attendance?
Look, I don't know whether it's appropriate, not appropriate, but I do know Treasury Secretary Bessent showed up when there were debates over tariffs.
He sure did.
And could anything be more important to the Federal Reserve Chair right now than how the Supreme Court delineates the president's authorities on for-cause firing of board members?
Yeah. Well, look, this is obviously something that will not be resolved today, and we understand it could be months before we know. Lisa Cook did issue a statement following the arguments this morning and talked about the insulation that Congress has put together to insulate the Fed from political threats, holding it accountable for delivering on the mandate. For as long as I serve at the Federal Reserve, she writes, I will uphold the principle of political independence in service to the American people. We could be in a world where she has another 3 or 4 Fed meetings before this case is decided. Should she be in those meetings?
Well, look, I think what Justice Kavanaugh got to in his questioning, which is if a governor can be fired without any hearing, without any due process, without any real establishment of for cause, it really fundamentally means that the American economy can be in for higher inflation, less credibility on the part of the central bank, because that is what central bank independence is so important for. So I do think this issue about making sure that the president's ability to fire for cause is carefully delineated, because otherwise we will lose that fundamental bedrock of the American economic dynamism.
I want to get your take on the state of the economy, but as long as we're talking about this, you have the case involving Lisa Cook, and you now have a criminal investigation into Chairman Jay Powell. What is it that the president is trying to do in reshaping the Fed, if nothing short of that?
Yeah, well, I think really the criminal investigation just seems like a spectacular misstep on his part. If anything, it has really raised concerns. We've heard from financial market leaders. We have now heard from prominent Senate Republicans who sit on the Senate Banking Committee. The move to criminally investigate the chair for some renovations has really, I think, set off alarm bells that could lead to the chair staying in his seat as governor for longer than he might have done otherwise.
Right. Isn't that something? We had Tom Tillis on the program last week under no uncertain terms. Says he will not consider a replacement until this is resolved. As we spend time with Lael Brainard, I want to go through some of the notes that I took during the president's address today before this crowd in Davos that I think we can agree knows a lot about the data. They probably have a couple Bloomberg terminals in that room. These are business leaders. These are world leaders who were listening to the president. Inflation has been defeated. Is that true?
Well, I think we know that inflation is still hovering close to 3%. We'll get the PCE inflation later, but inflation has not been defeated. Inflation close to 3% is not close to the Fed's target. There's more work to be done there.
The bold claim. Virtually no inflation, he says, and extraordinarily high economic growth. Over the past 3 months, he says core inflation has been 1.6%. He's projecting economic growth in the fourth quarter of almost 5.5%. Will that happen?
Seems very implausible. Don't forget, we had the shutdown in the fourth quarter, and that's likely to depress growth in the fourth quarter. Of course, we'll see a bounce back from that in the first quarter. He's right that we've had several quarters of very strong growth. That has been entirely propelled by the private sector AI boom. But if you look at jobs, it's been entirely jobless growth. So the rate of job creation has really plummeted during this time. And of course, with inflation still high, that's why you see consumer sentiment that's still very glum.
The president said people are doing very well. They're very happy with me. We've lifted more than 1.2 million people off of food stamps. How do you interpret those lines?
So, look, I think the polling, similar to the consumer sentiment data, suggests that actually there has been a precipitous decline in sentiment about the economy. And what we've seen in some recent elections is that a lot of Americans want the president to deliver on his promise to bring down prices on day one. Instead, prices have gone up a lot, and people are very concerned about affordability.
Well, and you wonder as well, the 1.2 million people off of food stamps, stamps. Is that because of the changes in eligibility, or is it because people are lifting themselves up with new jobs or higher wages?
Well, we certainly know that the big beautiful bill had restrictions on SNAP, food benefits that have been calamitous for many American families, and of course the Medicaid cuts, 11 to 13 million Americans that will potentially lose access. That won't kick in until after the midterms, but I think a lot of families are also already seeing the premium tax credits expiration means that they are paying double the premiums on their health insurance for another up to 20 million Americans.
And this may not be changing anytime soon as we watch the beat here, try to follow the beat on Capitol Hill. I want to ask you about housing. Really interesting. The president wants to ban institutional buyers from the single-family home market. That's one initiative that's been fixed. I suspect that'll be part of the State of the Union address. But he's been recently talking about his concerns over rating people's nest eggs in their homes, that making changes to the market could lower their home values. Listen to the president talking about this earlier in Davos.
Every time you make it more and more and more affordable for somebody to buy a house cheaply, you're actually hurting the value of those houses. Now, if I want to really crush the housing market, I could do that so fast and people could buy houses, but you would destroy a lot of people that already have houses.
I'm really curious your thoughts on this. Number one, I don't know how fast he could start building tens of millions of homes that I guess would be needed to actually lower home values. But how destructive would this be to people's savings?
Look, I think it was interesting, as you say, to hear him just reflect aloud. It seems like he's got some real ambivalence. Most Americans don't have a lot of ambivalence. They really do. They're hurting. Rent is too high. They want to own homes. Young families, first-time home owners who are aspirational. They've been locked out of the market for too long, and we know that the answer is more housing to be built. We are short 3 to 4 million units of housing at a minimum. And so in order to do that, a very forceful and long-term agenda needs to be put in place. The Senate actually had some good legislation, the Road to Affordability on housing. I think there's a lot of good ideas out there, but it really has to go beyond a few Band-Aids and take seriously the need for more supply.
It would take a lot to lower housing values. I suspect that would dent people's retirements, although we've been through a great recession before, and we've seen the housing market go through some pretty wild swings. Lastly, we have a minute left. Interest rates. The president says in the old days you had big numbers, they lowered rates. He doesn't understand the dynamic here with the Fed. We don't have time to get into all of that, but do you see a Federal Reserve that's on the precipice of cutting rates again?
So I think it'll all depend on the data. I actually think that this Federal Reserve is focused on the data. We have seen that the unemployment rate has held steady now. They were extremely concerned about a weakening labor market. For a month or two, we've seen some reassuring data there, which means they can take a little longer and see how those inflation numbers really play out. But if the president continues to threaten the Fed's independence, interest rates will actually go up.